ones that have done, it's nowhere near as time consuming in requirement, also mentally consuming for those, because there's quite a few of you that have done that. And you know how full on that is to learn the processes and whatnot, and how much chart time is required. This is the complete opposite. It's probably about spending less is more, to be honest, right? Because at the end of the day, it is a simple process, but repetition is key. Looking at being able to do max 5-10 trades, that's it, within a half an hour, 45-minute window, hour sort of max, get in, get out. You know, and I've done a lot of one-on-ones last year, or not one-on-ones, sorry, but just did little mini groups. I've done some calls with Ryan and Dom and Joey, like we sort of all jumped in together and just did some just chatting and a bit of trade talk with each other. And that's what this is also designed to do with our group chat. You know, you might be like, all right, just message the chat or message someone from the chat and just like, I'm doing some trading tonight, are you free, do you want to catch up? Because what I find is when you're able to talk it through and verbally go through with someone the charts, it's so much easier to be able to understand what's going on and try to find your trades. You know, even for myself, because you know, might be waiting looking for another one, and you got someone else. When we've done our little mini group calls, someone else like Dom might be like, oh, we'll go check this one, there's about to bounce. And then I can just, it's good to have different eyes on different things at once. Hang on, just adding in another one. Also moving forward, I've said to a couple of years as well, like my time's going to be a hell of a lot more. Like that's my biggest focus for 2022 is my limited time with things. And one thing I'm just conscious of is I don't want you guys to become too dependent. It happened a lot towards the end of last year where you just come too dependent on myself. So my one-on-ones is going to be during these calls. Like I know it's not obviously a one-on-one, but I'm going to be during these calls. So if you've got questions, you need to put them through here, because where I'm sort of moving into and things that I'm going to be looking at, my time is just going to be, it's going to be too difficult. And I spent way too much time with people that either one, just end up not doing trading, which is a bit of a counterintuitive how much time I'd spend with them, because I don't get paid for running these calls. It's counterintuitive. And second to that is, you know, or they'd become fully dependent on you and they would no longer learn the concepts. They would basically start to want me to tell them and look for those entries. So got to have that independence in yourself, guys. And I know most of you guys that are on here now, I have been, because you've been around for a while. And yeah, I appreciate you, and we'll crack in, because I know some people I've only just had a look at this a couple of times. Some people have been around for a while, so we're all a little bit different. But just also, I might get you to unmute yourself. And Kenny, we're going to introduce you as well, mate. I know you're new to it, but you've been around for a while. But just like, also Jess is, for those who are not someone who have been doing this trading now for a while, who I taught, she's actually working her way through smart money as well, just learning some different trading concepts and stuff. It's not required, but the process of this as well is to earn some quick capital, because it is really quite quick, and to still be making sure you're learning the smart money ways, or look at that as an option for like down the track. You know, use this sort of thing to pay yourself a little wage, cover your cost of at least for your subscription fee, so you're not running at a loss. And then, you know, you can, because that's really that long-term foundational wealth. And it's important to learn those smart money concepts, especially if you want to get into crypto or get into other financial areas. But just, also, do you want to just, oh, you're unmuted. Do you want to have a chat there as well with?
Yeah. Hey, everyone. I just had to jump on my phone. My computer kept cutting out. Hopefully you can hear me. But yeah, so obviously I've just started Smart Money. So I'm going through that. So I'm really excited to be able to implement that with HFX, but more so because I want to be able to trade like pre-pair trades further on as my daughter's getting older, as well as doing the trading with HFX. So that's what's awesome about IM, is you can go as far as you want to go. And I just wanted to advance my knowledge and learn more about the chart. So that's why I'm doing that. And yeah, pretty much agree with everything that Dom said. It's just obviously, yeah, really just working with the people that really are showing up and doing the work this year, because I was the same. I was doing lots of one-on-ones with lots of people, and yeah, just really putting some boundaries around our time. So yeah, hopefully we can get this set up on a Monday. And yeah, the guys that are open to it, like, I'm obviously happy to share more about like what I'm learning too with smart money and using that with HFX. A lot of the stuff that I know, Dom, the way you do it, you use a little bit of both. and it's worked out really well. So essentially I've learned everything from Dom, and now I'm just sort of taking my own initiative and learning a bit more myself. So yeah, keen to smash some trades, and yeah, that's it.
Thanks, Jess. I know I put on the spot there a little bit. Why has that gone back to the one now? So yeah, now I appreciate that. So with smart monies, like it's not something that's a necessity with this. It is important to, like I said, to branch in and to look for that for the next stage. Like obviously smart money, the biggest thing is through that is understanding market structure, understanding where the liquidity is, and understanding obviously the institutional areas for your areas of interest for where the price is heading as well, which again comes back into market structure. Nearly all of you have had a crack and done a little bit of smart money. So and I actually haven't logged on haven't even looked at a chart. This is my first time looking. I was, obviously it's not a very good time trading over the New Year period, a lot of public holidays, a lot of just not much liquidity running through. The market's only really just coming up. So sort of now into next week, generally week 3 is when I look to do most of my trading up again. And there's been some big updates with the back end. So as you can see here, like you've got downswing and upswing, which is new to me. I haven't seen that. So I need to go through and have a bit of a study and find out what updates have been had, because Liberty and basically all these indicators. So these are the paid indicators that you can buy, i.e. like Hourglass, Swipe Coin, all that kind of stuff. They're all being updated, and there's been some new implementations put through there. So I need to have a bit of a squiz of that as well, which is why it's been really quite laggy. So if you've noticed that as well, that is the reason for it, because they're still updating things as we go. Now, sometimes what you'll find is that this is different to your pocket options price. One of two things. One, you got to make sure that you're not OTC on pocket options. OTC stands for over the counter. That means you're trading not to the market value of the price. You're trading to the broker itself. So you're trading against pocket options itself, right? So it's a little bit harder, a little bit more, trading against the house, which isn't always the best. Not saying it's impossible, but it's not the easiest thing because it's just a lot more volatile. It doesn't flow. It's not as like normal market flow. You don't really see the same sort of indicators take place. So with that being said, also making sure what your broker that you've chosen on here as well, because if I type in Euro USD here, right, we can see the exchanges. I said broker, but exchanges, you can see like you got Hot Forex, all these different ones here, right? Now, generally what these should be is the Oanda and or the FXCM. That's the one I was looking for, FXCM. That's why you'll see a different price. Like I was looking there and I've looked FX choice. That's why the price chart looks different. So generally they'll go, pocket options should be based on Oanda and or FXCM. So if I just go, where did I see FXCM? 14,735. 14,735. Hang on, let me just refresh this. Now, because we've got a couple that are brand spanking. Like Kenny, do you want to unmute yourself, mate? Actually, I didn't give you a chance to say hello, but do you want to say hello? So Kenny's been involved in trading now for quite some time, also quite heavily in the personal development game, a real wizard of knowledge. Someone I just wanted to introduce yourself, mate, because I know you're going to jump on a couple of these calls moving forward.
Yeah, no worries, Dom. Yeah, so yeah, as Dom said, my name's Kenny. I've been inside of IM for, I don't know, it's probably going nearly 2 years now. I started with the smart money concept as well. I chose to come over to this method or this style mainly because it just suits. I've got a young family. I've got 4 kids under 9 years old, and sometimes I only get to trade at night time. That's the only thing. So I come over to here, and but still doing the smart money ways. I'm sort of invested more into the Wyckoff method with Zach McDonald. So for those guys that have seen that method, it does take some time to learn how that Wyckoff method works. So, but I still want to do some trading at the same time. So it just works well. But yeah, other than that, yeah, it's great that you're doing this, Dom, and looking forward to meeting everyone a bit more and getting more involved in it. So, yeah.
Thanks, mate. I appreciate that. And that's probably the biggest thing is to make sure that getting more involved with the way, because the last probably 7 or 8 calls I did, there's probably 1 or 2 questions from everyone. You guys need to ask. Dom's obviously great with that, asks a shitload of questions and treats it like a one-on-one. So feel free. I'm obviously just bouncing through a bit of a trading pair. This is not my ideal trade time for those that are relatively new. I tend to trade when I do trade in the late afternoon, early evening. So between that 2 to say no later than about 6 o'clock, because it just becomes too volatile. And I find this particular method that I've come up with is just, it's just a bit crazy with the volatility. So in terms
Can I ask something, Dom, just while we're on and it's our first call and you're recording, can you just briefly go over in Liberty what this indicators are that are on there for people?
Yeah, I can do it now. Like obviously there's a whole YouTube video that just goes through that for everything, but you can see here, one on Liberty, firstly, there's a few different to choose from. So to get into this, I've done a pre-recording to show you how to get into the back of this. Sorry guys, so much slower when I'm trying to do all this at once. There we go. I was trying to scroll up to there. So basically logging into your back office, and when you're going to academies, instead of clicking academies, there'll be strategies, which is a couple below. And then you load up Liberty here. Once you click Liberty, you've got 4 different strategies to choose from. I personally use this one, but if you are relatively new, it's probably easier to be doing something like this one, because as it loads, this one is a bit more simpler, a bit easier on the eye to understand. Now, it already has indicators preloaded on here. This is another reason why, I keep my subscription active, because it helps take out a lot of the guesswork because of the indicators. The top line and the bottom line work out as Bollinger Bands. And as you can see, essentially work as a bit of support and resistance. So bounce between the top and the bottom of the Bollinger Bands. So generally speaking, all right, when we do hit the top and we get a break, so we get a close above the Bollinger Bands, is when we generally will then get a fall to the bottom. Right, top to the bottom, as you can see. And that's when we are in, a bullish or a bearish form of trend taking place. So we can start to see now we're creating higher highs, higher lows, right? So, that's when we can see some nice bounces. When it's in a consolidating sideways market, so essentially just trending sideways, which, there's not too much here, maybe a little bit here. This is a bit ugly, and I personally wouldn't trade it unless I've been on for a little while and I can see some clear lines. So this middle line here is the EMA, which works out, it's just as estimated moving average. So this, sometimes I'll trade this. So if I can see a clear breakthrough, this isn't a problem. This is a better example here. If I can see a solid candle close through that EMA, then I'll get in for, obviously in this particular example, a sell. Right, that's if it's more in that sideways consolidating. So if I saw this candle, say in through this area, I will then sometimes trade that for a buy or a sell, because that's clear indication that we're going to see that continue move down. So that's an example through that. But yeah, so that was so looking at that, so when we get a bounce below, generally we get the bounce back up, but it's about important to make sure that we follow the indicators. So for example here, this is a really good one. It came down a couple of times. There was your fake out. So you saw that big push down, push below the blue line here. So it looks like it's broken the bottom of the Bollinger Band. So we should see a reversal. So then the blue one takes place. It comes up, but it's not an engulfing candle. This is where our smart money concepts have to come back into play. So this blue one here wasn't an engulfing. What that means is that this one wasn't bigger than the previous red one, right? So therefore, it's what I call a fake out, and it's just continued the downward move. So if you thought that this was going to be the reversal, so you get in for a buy, you would have lost that trade, right? These other indicators too work as what are called oversold and overbought. They're basically stochastic and an RSI, so they're just not labeled here. When price is below this blue line, it generally doesn't stay there too long. It means it's oversold. There's too much selling pressure and it needs to have a reversal. Same with this one, just works as a secondary indicator here. And then same to the upside. When we go above the red line, it doesn't stay there for too long. We need to see some sell pressure. We need it to fall down, which you can see here and here. We've got the fall away with that. It's a bit of a crappy candle though, so that would have been really, really shit. But still easily, you've got, well, that's the 1 hour, isn't it? It shouldn't be the 1 hour. It should be the 5 minute. Oh, it's the 1 hour anyway. I'll change that in a minute. But that's, consecutive, a lot of down candles. So yeah, this isn't a prime example here. So it doesn't matter what time frame in terms of what now we're looking in terms of explaining, because what happens on the 1 hour happens on the 5 minute. It's just about seeing what takes place. So this one here, we can see the big, large engulfing blue candle, right? That for me is enough of an indicator for a reversal taking place. So during this, basically, it's changed a little bit. What I've been noticing in this time, in the night time, so when you intend to trade is probably quite important. What I was finding, and Dom can speak to this, and Joey, you generally don't get your retracement candle. So what I mean by that is we see the blue engulfing, which obviously is bigger than this red one, right? Also that doji candle with a wick to the downside and a wick to the upside generally shows a reversal as well. So that just shows that there's price exhaustion, right? We had the big engulfing blue candle. Obviously these lines are now starting to head up. So that shows a reversal. What tends to happen during the day is you'll get the next candle. So this blue one would actually be a red one, and it would come back to that 50% mark. So what I mean by that is this blue one would sort of trade down to here, mitigate out of, that's again a smart money concept way. So would fill a bit of this imbalance, mitigate out of, and then go the reversal. And what I used to do, and what I tend to do during the day, is I'll trade the buy off the mitigation play, right? So I'll buy in here. But at nighttime, because it's a lot more aggressive market, you tend to not have it. It tends to just go when you get the reversal, right? You can sort of see here as well, the reversal took place. Although this is crappy price action leading up, it did just run. It didn't give you that opportunity to find that little retracement candle. So what I've been doing is basically, as soon as I'm seeing this candle print, and I'm keeping an eye on the close time. So as you can see here, obviously we're looking at the 1 hour. So, you know, that would only be, there might be a minute left, or there might be 30 seconds, 20 seconds. If I can clearly see that this candle is more than likely going to print and be engulfing and stay engulfing, I'm actually getting in during that candle, but I'm extending my time. So for the user that started originally, we were doing around about that 1 to 2 minutes for trades. So 1 minute 30, but most of you guys can only trade at night, and that method just wasn't really too applicable. So, you know, both myself and Dom and a few other guys were just test piloting, running some longer 4 minute, 5 minute trades. I even had a bit of a crack at some 20-minute trades as well, and looking on the 1 hour and looking on the half an hour. So I guess, you know, when it comes to this method, what we look for is always the same. It's just more about how much time you want to put into it, like in terms of like how long you want the time of the trade to go. And that also is determined on yourself. How quick are you to react? If you're a little bit hesitant to enter the trade, and obviously you're going to need to allow more time for your decision making to take place. So, and if you're seeing if you're looking at the 1 minute or the 5 minute, it's too crazy, change, go to the 10 minute or go to a higher time frame, look at the half an hour if you need to. And then also means it will help you avoid over trading as well, because, you know, if you're doing with a 1 to 1.5 minute and you're getting a couple of trades wrong, you know, you can whack out a ridiculous amount of trades in a short time. So maybe this is where you need, I guess there's no right or wrong in terms of, you need to see how you react to the market. So what I've sort of found is a sort of a happy medium as well. Although all my 20-minute trades actually all panned out really, really well, was looking at the 5 minute time frame here. So I'd have this on the 5, which we can see. Oh, that's what I had wrong differently. No wonder my charts are different. It's because I had this on the 1 minute. It's always a little bit funny. Sometimes my audio won't be able to see, as long as you can hear me well. So that was on the 5, and then that's why that was out of difference. So what I've been looking at, that's 5 seconds. Sorry, it's behind the bloody audio sign. This on the 5 minute, and what me and Dom and a couple others were doing is we had this on the 5, and I'd flick between this and the 5 and the 10. Although now, why is that not even on there? That's changed to 15. Anyway, look at the 5 and the 15. Used to be a 10 option there. And the reason why we look at 2 different time slots, not to confuse you, it's to understand where is price still got to go. So, you know, if we're looking here on the 5 minute, which doesn't really help us because that's Euro USD. I'm looking at gold right now. The reason why we look at 2 different time slots is because the top Forex, sometimes the 5 minute, for example, will show, sorry guys, where is FXCM? There it is. Oh, that's Euro NZD. Anyway, just for the sake of where we are right now, I'm just going to bring this up. Yeah, obviously, if you're that new and you don't know what I'm doing here, I'm just adding those to the top here so that I can quickly flick through them. So here on the 5 minute, we can see we're at the bottom of the Bollinger Band. But if we're looking here on Euro NSD and we go to the 15 minute, now luckily this is confluence. Now sometimes when you're looking at the 15 here, this might be at the top of the Bollinger Band, completely opposite direction, or it might be sitting in the middle, right? So for example, on this one, 15, this might be sitting here in the middle of the band. We know we need down the bottom, right? So then when I flick over, we must be in a reversal here. And this is our indicators, we're looking to come back up. Awesome. So I'm going to get in for a sell, but then we don't have that confluence on the 15. We're well away from the bottom of the band. So that shows me that's got more room to come down. So that's where you can sort of see. So it's important to bounce between two different time frames. And yeah, by me increasing the time is what I'm doing now. Again, because this is my time frame, so I'm using my demo account. I'm going to run through some trades now and have look at some setups. I'm going to keep to that 5 minute time. So for those who haven't looked at pocket options before, the M5 obviously stands for 5 minutes. What I do is I click the clock, right? Oh, sorry, that's a flag. Obviously click the flag that changed to preset time. I like to choose my own, so it's the exact time. The reason being for that is when you click this one, it goes by the market time. So, if you hit buy now, you're not actually getting a full 5 minutes, you're getting 4:20, 4:30, and that will just tend to stuff me around a little bit. I like the full time. So I'll keep to that 5 minutes. That's obviously the amount that you're looking to trade. And it's a simple concept of if you think the price is going to go up, hit higher. If you think it's going to go down, you're going to hit lower. This is updated too a little bit. Looks a little bit different. Now, I personally don't trade anything under 80%. So, this particular one I wouldn't trade, but it's just where I am. My computer's really laggy when I try to screen record and have all these systems going at once. So I do apologize. But looking at this now, you can sort of see we're in that area of interest on the 15 for a reversal. We're oversold. We're obviously outside the Bollinger Band. A reversal does need to take place. We need to look at structure as well. So we zoom out to understand structure. We pretty much are consolidating, but we are consolidating down. So, we have created that. This was our previous high point. We've created nothing but relatively lower lows moving forward. So we had the area of liquidity. So what that means is we had all those consecutive lows, which were here, which we have obviously come down and pushed and captured really, because that's still part of it. That's still part of it. All in this area. I don't see that as a consecutive enough of a push down. Through this movement here is where we really had it. Now, Euro NSD is an exotic. So not an exotic, but it's not one of the majors. So I wouldn't be one that I'd be looking at trading. As you can see with this move though, is our first significant move down, which has also taken this liquidity. So taken all these lows here, plus push down and make these lows here. So, I see a reversal taking place. We're well and truly away from any other lows. This is our next area. I like also with this, the reason why with Liberty, you can draw on it just like TradingView. So if I just go on here and put a horizontal line to the low where we are now, that's just going to help indicate where we are for where price is currently. So it's important to look left to get right. That's the same way. Even with this method, I still like it. I just find that you can do it a hell of a lot quicker. I like to come on for probably 20 minutes just to sort of see how things are going. We can see our little institutional area here and here with some equal lows. So this would be, we're really close to an area of that reversal. Just sort of verbally speak that through to you guys so you sort of understand what it is that I'm looking for. Not ideal when your areas so far back from that. Looking at where we are now, it's still in a crappy area. Price is sort of just going sideways on that 5 minute. So, I wouldn't be looking at personally doing anything with this right now. Let's see if we can see anything else take place. Any questions on that so far? I'm sure there would be. Just unmute yourself and go for it.
Yeah, hey Dom. Obviously, I had a look at it over the Chrissy break in the last week, and the markets were doing fuck all. So it was a bit hard to kind of get my head around. Just in terms of just the movement wasn't there to really implement the strategy that I've kind of looked at, which you've kind of gone for. What are what are your top 3 or 4 confirmations just for taking the trade? I've got the Bollinger Band's been obviously touched or broken through, overbought, oversold. The full engulfing 50%. Is there 2 or 3 main ones that you have that kind of really that kind of sell it for you? And other than that, this is exactly what I wanted though, was just to talk through some trades with somebody. So if there's anybody in the group chat that during the days, I'm off work at the moment on compo. So if anybody during the days has an hour or something they're jumping on and they want to trade or talk through some shit, I'd appreciate that as well. Just the same thing we're doing now.
Yeah.
So if you just maybe if there's a couple I can even see now just being on the movement in the charts is completely different to what it's been. So it's more relevant even now. But yeah, is there a couple, maybe 3 or 4 top things that you'd say you would take a trade for? Or,
yeah, definitely, mate. I appreciate the question. And yeah, that's what I wanted to do for this chat to be like in terms of the HFX chat. Just buddy up with someone, say this is my normal trading time. Does it coincide with you? Or even it's like, hey guys, I'm going to get on in half an hour, put it on there. Like I ideally wanted this to get to a point where it was just live trading, but there's too many people coming in at different times. It's a little bit hard. And I know for me, it's not my normal time. And also when I try to screen record and do this, it's so laggy. So if I execute a trade, it just doesn't hit exactly where I want. But if to answer your question anyway, so if we're looking at this now, like this is showing pretty good opportunity on Euro GPV. We obviously we've come down, we've had that rejection wick here. So what that means is that huge wick push down. I'm already talking about it. I just want to get in so it's sort of run now, which is annoying. So I hate trying to do it. I can't trade live properly with my money and try to talk it through with people. But if we just watch this now, you can sort of see. So as I said, we hit the top of the Bollinger Band, we've come down, we now hit the bottom of the Bollinger Band. So do we have candles pushing out? It's not a huge close above, but this wick here shows to me that price basically got pushed down. It's come down with that wick there and took these previous lows. We had a low, equal low virtually here, and this is our little institutional area. So remember the last down before the up, which broke structure, left imbalance. You can see that there. Yeah, we kind of come down in here, but it's kind of done the same thing. So we've pushed down, that little wick coming through comes down and takes these areas here. And also, the indicators here is important as well. Are we seeing that we were oversold? Do we have that move coming up? These are set at different numbers. So you got 333 and 733. We just found that test piloting that this was a little bit easier. Again, these just work as indicators to show where price is heading. The 333 works a little bit faster. So if I can start to see that move generally, then this will follow in behind. And this is just your RSI, same concept, just different numbers and more indicators, 30 and 70. Is this starting to come up? If so, then we've got to see. But we can't rush as well into it, which is why I like dealing with the lower ones, the high time frames, because they just allowed a little bit more time to analyze and not rush your decision. So based on sort of what we're seeing here, do we get the confluence as well on the Liberty charts? It's a little bit more ugly because now we've sort of got here on the 15, 1, 2, 3, 4, virtually 4 equal lows, but we are seeing the same reversals coming up here and here, even on the 15. Basically, so yeah, answer your question. Are we at the bottom of Bollinger Bands? Yes or no? Are we seeing any kind of price action with an engulfing candle? Now we can see an engulfing candle take place, right? Got to wait to sort of obviously this finished printing. Are we having our reversals here on the indicators? Yes. And is Liberty showing those same confluences as well on the higher time frame? I generally have the lower time frame on pocket options and the higher time frame on Liberty, because obviously with this you can't. It's not like TradingView where you can just flick through, have multiple screens at once of your pairs loaded up, which is a little bit annoying and something I'm trying to get changed. But that would probably be about it, mate. And then, what's not ideal is the way this candle's currently printing. So for me, like I wouldn't sit here and wait. I would move on to other ones, but because I'm trying to talk to you guys, it's a little bit slower process. As you can see, I'd be flicking through them all and keep moving around. I just have this as the watching one. So again, now we had that come up, why you don't rush into it. If I'd gotten in just because I was seeing those indicators take place, as you can see, it's now falling away. So I want to see if that had closed above here, yellow, and we've still got a bit of time to go, then that'd be something I'd be more interested in. I still think that there's a reversal to take place, but it's
with
just
that
not
exact thing happening there.
Now.
The stochastic oscillator, when the lines are crossing and then obviously retracing back up or down, breaking through those oversold marks, is there a point where they cross? If they're staying too close together, you're kind of a bit more hesitant. Are you more inclined to take a trade when they're starting to separate more? That's showing more strength in the pair?
No, you brought that good example, question up there. Sorry, not question. You brought a good thing up there. So if you can sort of see here, guys, what they mean by the crossover, it's not color coded, but the blue means obviously buying pressure. So it was going up, so if we're going off my look at footy talk, look off my candles, you got the yellow. So the bigger the gap between the lines indicate the bigger volume of the selling pressure to the upside in this one, or in this case to the downside. So when we can see that crossover take place as it sort of is happening, like say, for example, here, this shows that there is a reversal pending, like we're in that plateau, and because it's literally just going sideways, it's because now price is going sideways, which is annoying. But when you see that crossover and then generally a good spread, that's when there's a lot of volume coming in, which is what happened with this move here. It's not as consistent in terms of it didn't quite break the Bollinger Band, but we still have what we saw. we had down at the bottom, we did touch the bottom of the Bollinger Band. We had an engulfing yellow candle. And here, these would have shown, by the time that's finished printing, we would have already been about here on those lines. And you can see both on those two indicators, a big gap and movement coming up, which just shows to me volume. And then I'm like, yeah, I'm getting it on a buy for that particular one, right? Which then showed as well on the 15, which was, well, in this one, if I want to look at this on the 5, just to see that same confluence. That was, hang on, am I looking at Euro GBP? Yep, Euro GBP on the 5, I'm trying to see it now. That's this one here, this movement here, which it didn't quite get as oversold. I mean, back as that. It's different with the candles like that. Yeah, through this movement, golfing. Is that the same? Hang on, am I looking at the same thing? Am I looking at FXCM? FXCM. Get back there. Right now, so you can see that was a fake out. That's why, again, it's not something you'd get into. Let's just see if I can try to find something a little bit quicker. Does anyone have any other questions? Well, why, or anyone want to bring anything up? Dom, I know you like to talk a lot of things with this sort of stuff.
Yeah,
have you been finding?
Couple of little things, mate. So that second, not the candle that's printing now, but the one before that, that actually came up and wicked up to mitigate 50% of the imbalance between, well, you can see where it mitigated the 50% imbalance, 2 candles before that. And that's why it wicked up to there and then dropped back down. And also, if you look at the wick 1, 2, 3, 4 before the one that's printing now, that actually hasn't, it's actually taken all the liquidity in that one. And so, yeah, that's an area that we're not really interested in anymore now. That's all been taken, mate. So I believe that this one is going to just keep heading down. On Liberty, you can see that the overbought and oversold in the red there. So the red wave or the mountain is a really bright red. So I believe we're going to be heading down there.
Yes, so that for that mountain, the example there for the guys that have done a little bit more, that's on the different. I'm just going to go on this and go copy. That's a little. That's an example. That's a little trick, guys. I learned that myself, but I'll copy and paste. Because if you change strategies, it goes back to default, and the default will set this to the default price. So if you just copy and paste it, it's so much quicker. I said so much quicker, but it's slow with the loading of things. So with the mountains and stuff that we're talking about, that's just a bit more of an advanced indicator. It's this one here, but I personally like it's the one that I use the most, just because it has a lot more going on for it. Do you know what I've just done? I have to. I copied that one. My own little cheat. What am I looking at again?
GBP.
Yeah, sorry. Trying to get back into it. Euro GBP.
I'm trying to help you with your lag. It's fucking horrendous, isn't it?
Oh, it's so bad. I don't know why it's playing up. It's never normally this bad. Might see if I just bring the router a bit closer. The old chestnut, bring the router closer. Come on. So with these, just while I'm using it on the example, so what we have here with these is, again, sort of volume, a bit like our volume candles that you see on TradingView, working out how much volume was coming into that. What I like, though, is they have the gray, which just shows that basically some volume starting to stagnate. So we had this movement here coming up right through here, which is obviously very aggressive, very bullish movement coming up. And that obviously coincided with here. But what I liked is we can see that these were getting bigger and bigger. Now, I know it's easy to look back to see, but they were getting bigger and bigger, which shows that there's still more volume. And there was a tipping point. So where price started to exhaust, which we can see, which gets printed in these gray bars, right? When the gray bars start to take place, shows us also that there's a reversal that should more than likely take. Should more than likely be presenting, and that's when we had the movement coming down. Now, so essentially, if I'm looking for trading these reversals, I want to see the gray take place, and obviously still looking for other confluences. Was there an engulfing candle? What happened? Not very nice price action coming out of next of it, which was a little bit annoying. You see that quite often, unfortunately. So that's why you've got to be patient and look for your opportunities, because you will get you won't always get this up and then straight back down. You might get a little bit of sideways action to build liquidity before then it goes then move down. So you just need to be really patient with that one. But yeah, so they just work. And this one here is just the volume of the waves of the mountains. So same sort of example. So when you have the blue mountain to the upside, it means there's buying pressure. Red mountain to the downside is obviously selling pressure. And then the mountain size just shows you the volume of what's taking place. But what happens here is you can see the dark, when it starts to go dark and the line's now going red, it's showing that there is now selling pressure, even though we're still above. So there's still bullish price action. So I like to see these things take place. So that will show that there's a reversal as well. Now, I don't want to go into too much of that. I don't want to confuse you because that one's a bit more confusing, but otherwise start with the other one that we had prior. Okay. Start with the other one that we had prior because it's a little bit easier to understand. All right. Now, it's so goddamn laggy. Is my audio laggy or just my video?
Just the video.
Okay, awesome. What am I going to do? I'm going to just see if this works. Ignore me. I'm turning my video off. Weirdly enough, that tends to sometimes fix when I'm running my online classes. All right, come back. All right, now. Through some quicker ones. So obviously this pretty crappy, just leave this, doesn't help at all when it's sort of sitting in the middle because it can go either way and you don't really know, like even though the indicators are showing up here, and these are why as well with these indicators, I don't have too much reliance on them just because they are like, you know, that's showing up, but it's going down. So looking at candles obviously will always show everything. They'll leave the best example. So following the candles is the biggest thing we're going to be looking at. So that's why I like to see engulfing candles, seeing those mitigation plays, etc., because that's what's going to be giving you the best advice moving forward, not relying on these indicators. They're just as extra confluences. If anyone sees it, I'm flicking through.
Sorry, Tom, with that middle line there, if they're more full of candles, though, you can play off that line still, can't you? Obviously, it's not ideal, but if you're watching those stochastics going up, you can then bounce off that whatever it's called, that middle one.
Yeah, the EMA. So, like I said, I'll straight off the EMA when I see an opportunity, but I need to see it, and I want to generally trade off because it's broken through as well, and everything else coincides. That's literally just gone sideways. That is just ugly. So also we're just looking through some other ones. What I also recommend is, guys, if you've got the opportunity, do a bit of that trading during the day. So still looking at the things I'm talking about now, but during the day between that 2 and 4, 2 and 6, you know, if you get home working, you sort of get home around that 5 o'clock, quickly jump on the computer, do a couple of demo trades, have a squeeze, because the method that we're looking at does tend to be a lot better during those times. If anyone sees anything on a pair or anything, feel free to just see that, because this price is the charts are looking yuck. And that's one thing as well. If it is like this, flicking through and not really showing anything, not many good opportunities, I just would just pack the computer up, come back in an hour or come back in half an hour. Because sometimes even during the day, you'll see that where it's just not really doing too much. And we're obviously the time of year doesn't help as well. Generally week 3 is when we rip into some better price action, more volume coming through. And there's been a lot of, if you're staying privy to what's going on in the markets right now, obviously a hell of a lot of shit taking place between crypto and new regulations and new shit happening, and a lot of uncertainty in the market. Go, mate.
While you're just flicking through, if you look where the price is, and then you've got 5 minutes, and then you can change the candles and all the rest of it. If you go to those 4 square boxes and click on that, you can actually have 2 charts on your screen at the same time.
Sorry, say that again. Oh,
this one left. Yeah, click on it.
Yeah. Sorry with that. My screen's not going to like that.
It just found that really easy. I can have the 3, and then I can have the 15 on Liberty.
So the fact that I didn't even know that is astronomical. I swear, was that there before?
Yeah.
Was that always there? Don't lie to me.
No, I think it's new, mate.
Actually, yeah, I just generally never saw that window one before. So
no, I believe it's new.
That's
Yep,
awesome.
so you can have 3 and the 5, and then you can have the 15 on your other monitor, and then you're all set up then.
Yes. That's awesome. So good to know that. I won't do that now because of the Zoom and all that. It's just too my little screen. I've got my big monitor there that I'll do with that. But definitely, I just want to recommend you guys doing so you can have multiple charts happening through at once. That's cool. Thanks for that, mate. Appreciate that.
Yep, too easy, man.
Mate, price is just going.
I have found that this time of night price is pretty shitty. There's a lot of sideways movement, a lot of very small candles, a lot of dojis, a lot of fake outs. Yeah, definitely not a lot of accumulation happening. Yeah, 5 till 8. I mean, you like 2 to 6, but I'm finding 5 till 8 is pretty good, and then after 8, it just goes nuts.
Yeah, it does. It just 100% it does. That's why as well. So looking at times and stuff. So if I was to run one on a Monday, I know there's not as much liquidity going through on a Monday, but it's probably better Monday than a Friday. I know I'm fairly certain we did our little group call on a Monday. I'm sure it was Monday afternoon. Which I don't mind as well, because markets do tend to move a little bit slower on that Monday time frame. So it's a little bit easier to sort of anticipate and see movement. To be honest, markets tend to move like this kind of pace because this is very slow, but slow in giving you opportunities. So is anyone able to do on Monday but then doing it like a little bit earlier? So, not this 9 o'clock for you guys over in Victoria and Sydney. So, maybe say I don't know, just spitballing a few things at the moment. But what's the earliest, like for your own full Jess, like I know you got the little one and stuff. What's the earliest? I don't know, she might not even be on here anymore. But if 6 my time is 7 your time for most of you guys, because most of you guys are all out of state. So, but yeah, what's the earliest someone could do on a Monday? And is Monday even option anytime? Yeah.
Probably 4 o'clock.
Yeah, I know you finish up a little bit earlier on that Monday. Joey, I know you're working at the moment, so you're sweet.
Yeah, I can do it anytime, man. Whatever suits everyone else.
Kenos, you're traveling, so you'll be in and out. Ryan, I don't know if you can actually talk. You can just put it in the chat. Like, I know your work schedule is a little bit all over the place. Would Monday be a suit for you, mate? Either just put it in the chat, mate, if you need to, or you can just message me on Instagram. That's fine.
Hey, Dom.
Yeah, mate.
Just go over that trade that you've just taken now. Just tell us why you took that trade, mate.
Yeah, look, it's just I just wanted to be able to do something, to be honest, guys. So definitely don't talk to me. I just wanted to be able to talk about something. So that's just basically counteracting on the fact that we are very. So if you're looking at the prior price action before, like we've really only had that one candle that's gone up. We've got nothing but continue to trend down. At that time, obviously, this one hadn't played. This was still wanting to fall. So we obviously have had that reversal where it's starting to curl up, but these are lagging indicators. I'll be really annoyed if that is going to be the reversal now, but I don't believe that it is. And yeah, we obviously haven't come off the EMA. So sometimes as well, to answer your coincide what you said before, mate. Sometimes what happens is in a bullish or bearish, this EMA becomes support, basically, or a resistance. So in this particular action, we obviously are trading down, so we're trending down. So we haven't broken this EMA off the last half an hour of candles. So if I can see a play where we get like this rejection a week off, if I'm looking at this live and I'm seeing touch, reject, touch, reject, touch, reject, I'll actually trade a sell off this and continue the trend down. And that's been very profitable as well. So be aware of that you can see those things take place. So if I was just watching this now, not like I said, I was trading off this, I just saw that we were still continuing to trend down. I just wanted to be able to do a trade with this. That's all, to be honest.
Yeah.
I'm not a complete, like, obviously guess. I'm still trading with the trend. We're flowing down, looking at that right opportunity. We're now going to head what looks like some consolidation, to be honest. That's kind of pretty shit, but that's my only trade that I've done. So this here now, it's sort of sitting sideways. Really annoying that it's been like this. Apologies, guys, but we can't do much about it in the way the stupid market is. But that's, I guess, like I said, the patience is for me. Like, you just step away. Don't try to force something like I'm doing now. It's just more because, you guys have actually put the time in to be here. So And more often than not, by trying to force something, you're guessing and get it wrong. What's this one now that I'm on Euro JPY? When you see this where we were sort of sitting, we've had that flip now. So we had that huge engulfing candle push through the EMA. We had that 1 week that's come up, just rejected off. We've still got some crazy downward selling pressure. So sometimes this is what I'll do is I'll actually reduce the time slightly. And it's basically just trading with the trend. Again, I wouldn't normally do this now because obviously the market's just shit. But if I'm going quite well, trading pretty good, and I've been sticking with a pair for a while or a couple of pairs, I'm starting again to see the momentum. So you can see the split between the lines is even more. The RSI, I can't see because it's behind your heads. RSI is still wanting to fall. So I'll actually look at a shorter term because we are already in those lower areas. So I don't want this to last too long because the reversal is probably pretty imminent. I'll actually do a sell off through here as well. But yeah, market's really crappy, really crappy. Anything else you guys wanted to touch on?
I found learning about mitigation, order blocks, imbalances has really helped me understand the direction of the markets and why they're heading in that way. So yeah, I'm just finding that just learning that little bit of information was really helpful for me rather than just sort of seeing it go up and down, up and down, up and down, and not understanding why it was moving in that way. So yeah, if anybody's interested in learning that sort of stuff, I believe personally that once you know those last few little bits, it would really help you with this sort of trading.
Yeah, which pretty much obviously Kenny, Andy, Joey all have done it. Ryan's the only one that hasn't, but that's fine. Everyone else has all done it. So that's important just to be able to like obviously look and see where things are. Understand that liquidity there. We all know that. I don't need to talk to you about it, but understand I still do use those things. When the market's good and it's a bit more of a healthy traders market, you just don't need to spend 8 hours looking for smart money concepts, doing chart markups, and then waiting for the opportunity to present. They tend to get in and out a lot quicker. So you can see with this one, based on what the indicators were showing, trading with the trend, I'm still moving down. There was a big enough gap between these RSIs wanting to fall. I'm trading with it, so I'm taking away my risk. But that's one thing I found, not all the time, but obviously with the trend trade, you're trying to anticipate the trend. So obviously, you're trying to counteract on that. Whereas this is going with it. So that's one thing that I will tend to do as well. If I'm noticing my counter trend trading is not really working, it's not being very proficient. I guess the biggest thing, guys, is what I found with a lot of students is that you've got no problem knowing what to look for. It's probably the time becomes the biggest issue. And I understand I've twinkled time a lot and seeing what's the best, but that does honestly come down to your reaction and how you're able to anticipate. This one here that I just traded off, I don't think I spoke about it. Again, just reaching, but I want to use examples of things that I do tend to look for. The Bollinger Bands have come quite close together. So when that happens is generally that means we are going to do some like consolidating, so some shit sideways price action. But what I saw was just a little bit, again, what we spoke about with Andy. We had that like the full solid close candle, so push through the EMA. And then what happened with the next one, we had a push up. It was really a mitigation play off this little one and a rejection wick. So the wicks come down, wick to the upside. So that shows me that price is still wanting to come down. And that one was a bit more of a clearer one. Though what makes it hard though with this is knowing just what about the time. So just because they are already so close, the Bollinger Bands in reality didn't have too far to fall before we hit the bottom, and then we should see a bounce again before we start coming back up. So I couldn't have too long and I couldn't have too short. So again, I wish I could say that you just do this each time, but it's not the case. It's really not. You need to learn, and that's just through repetition. But this one looks like it's going to be, and because it is moving a little bit slower, that last one that I did, I only did 3 or 2 minutes and only just snuck past. But if we go back to it, Euro JPY, was it Euro JPY or was it? Yeah, it was Euro JPY. We've had the bounce there anyway. We can see it's still trending down, but just really slow. So I'm just wanting to increase my time. Having this extra 2 minutes on this has helped it just easily smash down. So there, I guess, a couple examples. So looking for the reversal trade. So we get the bounce off the Bollinger Bands, looking for those engulfing candles, and or when we get the break through the EMA and trading with the trend. Hopefully that's a lot more information for you. You can work with that for the next week. That's fucking shit. That's terrible. See that you'll see that a lot where and Joey can speak from this because I've done a few times with him where you see your bounce off the EMA, bounce off the Bollinger Band, you get your big engulfing care, everything shows that it should be falling, and then you'll just get this afterwards, and it's like a big FU. And then what's even worse is it will continue to do it. So you're like, okay, no worries, that was just that one. And then you're like, cool, I'll go in again, and then it just continues to go sideways. Like, you're a prick. Why did you do that? Cool, guys. Well, I'm going to leave it there because I like to try and keep these short. That was already basically an hour anyway, so that went a little bit longer. I'll put on the chat Monday. Let's do Monday. I think everyone said was good for 6 because, well, 6 is your 7. So my 5 would be your 6. And that means 5. You said you could do 5 at Dom, couldn't you?
Yeah, 4 or 5. 5 is probably better.
Yeah, 5, which makes everyone else's 6s. So if anyone can't do 6, let me know. But I think that means 6 for you guys that are Tassie and Victoria and stuff. So our 5 Monday, that'll work for me. I'll be able to make that work. And it's going to be similar speed, but hopefully by another 4 or 5 days, the market's moving a little bit better. But still play around with that, guys. And that should be enough to keep you going until Monday, all right? I appreciate you being on, team.
Thank you. Thank you.
Thanks, heaps, scores.
Thanks, man. Cheers.